It's one thing to hear about demographic shifts, and then it's another to see the numbers like projected by 2044, the U.S. is going to be a majority minority nation.
Hmm.
And that's huge when you really think about the implications.
Absolutely. And when we think about our economic future, understanding minority business enterprises, MBEs isn't just this like niche topic. It's really about the core of where our country's economy is headed.
Yeah, and that's why we're doing this deep dive. You sent over this report, the MBE contributions to the U.S. economy 2021 report,
Right.
and it's from the Minority Business Development Agency and the U.S. Department of Commerce.
Right.
And there's some really notable researchers involved, Efrain Gonzalez Jr., Bridget Gonzalez, and Dr. Federico Mini.
Yeah, those are some heavy hitters in this field.
Oh, yeah. And, going through it, I have to admit, it was eye-opening, just the sheer scale of how much MBEs contribute to the economy and the potential that's there. It's kind of mind-blowing.
Yeah, I think that's what's so valuable about this report. It takes this part of our economy that sometimes flies under the radar and puts hard data behind it. It highlights both the potential and the challenges they face.
Right. And that's what we're trying to do today, really get a handle on, okay, what is the economic impact of MBEs now? Where are they headed? What are the barriers they're dealing with? And what does all this mean for the U.S. economy overall?
Exactly.
I mean, we're talking trillions of dollars in revenue, millions of jobs. But I also want to dig into this idea of the opportunity gap the report talks about. That phrase jumped out at me.
Yeah, that's the crux of it, isn't it? How do we make sure the growth of MBEs translates to shared prosperity for everyone? It suggests there's this gap between where we are and where we could be.
Right. So before we get too far into the weeds, let's define our terms when we say MBE in this context. What are we actually talking about?
Well, the report zeroes in on what they call classifiable employer firms. So think privately held for-profit companies based in the U.S., where the ownership can be clearly categorized, by race, ethnicity, gender, veteran status.
Okay.
And this excludes those big publicly traded companies or companies owned by entities outside the U.S.
Got it. So really, we're talking about the entrepreneurial side of things, the small and medium-sized businesses that really drive job creation and innovation.
Precisely.
Okay, so let's start with a snapshot of where things stand now. The report uses 2017 data, and we're looking at roughly 1.015 million MBEs with employees.
Yeah.
And get this, they generated $1.4 trillion in revenue.
Wow.
And they were responsible for 8.9 million jobs. I mean, that's not insignificant.
Not at all. And when we look at the bigger picture, their contribution to the overall economy was significant, too. Their value added in 2012 was $449.3 billion, which is about 2.8% of the total U.S. GDP.
Right. So they're already making a big impact. But, tying this back to the demographics we talked about earlier, the minority share of the population is on the rise. 36% in 2010, around 40% in 2020, projected to hit 50% by 2044 and 56% by 2060. So it seems like the role of MBEs and minority workers in the economy is only going to get bigger.
It's inevitable, and the projections bear that out. The report estimates that the GDP contribution of those classifiable minority businesses is going to jump from 1.6% in 2010 and 2.5% in 2020, all the way to 7.4% by 2060.
Wow.
And the share of the workforce employed by MBEs is also projected to increase substantially from 4.6% in 2010, 5.9% in 2020, to 8.8% in 2060. So there's a clear upward trajectory.
But here's the thing that really got me thinking. The report highlights this productivity gap. MBEs and minority workers are lagging behind their non-minority counterparts, and that has some pretty serious implications for overall economic growth.
Right, and they put a number on that potential drag on the economy, a whopping $5.3 trillion per year by 2060. In 2012 dollars.
Yeah, that's the opportunity gap, right? The difference in value added to GDP between MBEs and non-MBEs if things continue as they are.
Exactly. It highlights the economic potential that we're leaving on the table.
Okay, so I think we need to break down this idea of productivity. What are we actually talking about here?
Well, in simple terms, it's about efficiency. It's the relationship between a firm's inputs, like its labor and capital, and its output or value added.
Okay.
So if a business can produce more value with the same or fewer resources, their productivity is higher.
Makes sense now. Are there certain sectors or industries where MBEs tend to cluster?
Absolutely. The report highlights 6 industries with the highest share of MBEs that have employees: retail, trade, accommodation, and food services, healthcare and social assistance, professional, scientific, and technical services, other services, and construction.
So it's a pretty diverse mix.
It is.
Now it seems like there's some movement happening in terms of where MBEs and minority workers are focusing their efforts.
Yeah, there's a positive trend the report points out where Both MBEs and the minority workforce are moving towards sectors and occupations that are generally associated with higher productivity.
Hmm.
So, for instance, we're seeing the minority workforce shifting away from more traditional roles like office and clerical workers and operatives towards professional and technical services.
Hmm.
We also see changes in the concentration of MBE sales, with growth in professional, scientific, and technical services, and a decline in manufacturing between 2012 and 2017. So this move towards higher productivity sectors could be a good sign for the future.
Now, the report mentions this inclusive growth model, or IGM. What's that all about?
So the IGM is a model the researchers use to project how much MBEs will contribute to GDP in the future based on current trends.
Okay.
It takes the existing data and extrapolates it forward to give us a potential glimpse into what the future might hold.
So what does the IGM tell us about when MBE contributions might catch up to their representation in the population?
Well, here's the thing. Even though the minority population is projected to surpass the non-minority population by 2044, the IGM projects that their GDP contributions won't reach parity until 2059.
Hmm.
That's quite a lag, and when you look at the baseline data, the value of sales per employee for employer MBEs is currently only about 80% of their non-MBE counterparts, which suggests lower value added, as we discussed.
And just to remind us, when we talk about GDP contribution, what are we actually measuring?
Sure, so from the income side, GDP is basically the total income generated within the economy. This includes things like compensation of employees, which means wages and salaries, indirect taxes, and what we call gross operating surplus, which is basically the value added or profit made by businesses.
Now, it sounds like getting a really accurate picture of MBE contributions isn't always easy given the data we have.
You're right, the report acknowledges that there's some limitations with the availability and the consistency of MBE data, and this makes comparing productivity trends a bit trickier.
So how did the researchers go about putting this report together and making these projections with those limitations in mind?
Well, they had to get creative. They linked data from several different sources: the Census Survey of Business Owners, the Census Annual Survey of Entrepreneurs, and the Bureau of Economic Analysis input-output tables. And one key factor that linked all these data sets was payroll data.
Okay, so why was payroll data so important?
Payroll data provides a more reliable way to connect MBE-specific data to the broader national accounts compared to using something like gross receipts.
Why is that?
Well, gross receipts can include the cost of goods sold and other intermediate expenses, particularly in sectors like wholesale and retail trade. And that can make it harder to see the firm's true value-added data. The report actually shows that there's a much better match between the Census Bureau's payroll data and the Bureau of Economic Analysis's data on employee compensation compared to using gross receipts and total costs.
Got it. And I imagine there were some challenges in making all these different data sets play nicely together.
Well, there were definitely some statistical adjustments needed. The researchers had to remap NAICS codes, which are those industry classification codes, and they had to scale the data to make sure it aligned with the totals from the Bureau of Economic Analysis.
So it was a pretty complex process.
It was.
Now, did the report uncover any interesting regional differences in MBE activity? You know, how things are playing out at the state level?
Yes, it did. In 2012, the states with the highest number of employer MBEs were California, Texas, Florida, New York, and Georgia. Not surprisingly, these states also have large and diverse populations. And interestingly, they all saw an increase in MBEs between 2007 and 2012.
So those are the big players. Were there any states that saw really fast growth in MBEs during that period?
Well, the report doesn't list all the fastest growing states, but it does mention an overall trend. Minority groups tend to have fewer businesses than you might expect, given their share of the adult population. Except for Asian-owned MBEs, they tend to have a more proportional or even higher representation in employer firms.
Interesting. And what about the types of industries that MBEs are concentrated in at the state level compared to non-MBEs?
Well, MBEs across different states tend to be more concentrated in sectors like accommodation and food services, retail trade, and healthcare and social assistance compared to non-MBEs. And there are some differences among different minority groups too. For instance, African-American-owned MBEs tend to have the biggest differences in their industry composition compared to non-MBEs.
It sounds like industry concentration is part of the story, but not the whole story when it comes to explaining the economic differences.
Exactly. While the types of industries MBEs operate in do contribute to some of the differences we see in gross operating surplus compared to non-minority firms, it doesn't fully explain it. Things like firm size and brand recognition probably also play a significant role.
Right, so let's circle back to that productivity gap. What does the IGM project for how that gap might evolve in the future, both for businesses and workers?
Okay, so the IGM projects that If current trends continue, the productivity gap between minority and non-minority businesses, as measured by total sales per employee, is actually expected to shrink over time, and they might even intersect around 2053.
Okay, so that's positive.
Yeah, that'd be a good sign.
But what about the productivity of the individual workers within those businesses? Is the outlook as promising?
Well, unfortunately, the projection for worker productivity, which they measure using real hourly wage rates, is a bit less encouraging.
Right.
The IGM suggests that the productivity gap between minority and non-minority workers is likely to stick around. It might remain stable or even widen a little, and this could be due to things like slower wage growth for part-time minority workers and the overall mix of full-time versus part-time jobs within the minority workforce.
And imagine those ongoing differences in worker productivity would have a real impact on the economy.
Oh, absolutely.
Right.
The report estimates that if this productivity gap persists, we could be looking at a potential loss of $5.3 trillion per year by 2060, which is about 11% of the total projected economy. It's a significant chunk of change.
Now, the report also mentions this concept of GDP employment parity. Can you explain what that means?
Sure. So GDP employment parity basically compares a group's share of economic output to their share of jobs. If a group's GDP contribution is proportional to their share of employment, then the parity ratio would be 1.
Okay.
And the IGM projects that minority workers' contributions to GDP will be lower than their share of employment, with this parity ratio not reaching 1 until sometime around 2059.
So even though we expect the number of minority workers to exceed the number of non-minority workers relatively soon, their overall contribution to the economy won't catch up for quite a while.
That's the key point. Just having a larger minority workforce doesn't automatically lead to equal economic output, especially if there are underlying issues with productivity that haven't been addressed.
Right. So we're seeing this really interesting dynamic where MBEs and minority workers are becoming increasingly important to the U.S. economy, but there's this persistent productivity gap that's holding things back.
Exactly, and it really underscores the urgency of addressing the factors that are driving that gap.
And the report offers some recommendations for how to do that.
It does. The report argues that we need to boost the performance of MBEs by helping them grow in sectors with high potential, by encouraging them to adopt new technologies, and by improving their access to capital and resources. This isn't just about helping those specific businesses, it's about ensuring the health and vibrancy of the U.S. economy as a whole.
It really makes you think about the future and what kinds of policies and initiatives might be most effective in helping MBEs grow and become more productive and close that opportunity gap.
That's the million-dollar question, isn't it? It's probably going to take a multi-pronged approach, one that tackles systemic barriers, fosters innovation, invests in workforce development, and ensures equitable access to financing and market opportunities.
And it's good to know that this analysis isn't just a one-off. The report says that the IGM model will be updated every year, which will give us a way to track our progress on these important economic indicators.
Yes, those yearly updates will be crucial in helping us understand whether we're moving in the right direction and whether the actions we're taking are actually making a difference.
Okay, so as we wrap up this deep dive, I want to leave you with this final thought. If we could close or even significantly reduce that projected $5.3 trillion opportunity gap, imagine the impact that would have on innovation, job creation, and overall prosperity in the U.S. It really highlights the crucial link between economic growth and equity and the enormous potential that lies in empowering minority businesses and workers.
It's a powerful thought, and it underscores the importance of this conversation and the work that needs to be done.
Thanks for joining me for this deep dive. It's been really illuminating.
My pleasure. Thanks for having me.
And to all our listeners, thanks for tuning in. We'll see you next time.
See you then.